All right. Hey, everybody. Thanks for joining us again for another market review here at Maxi. I'm Max. I'm joined as usual by Sid, and we're going to start right off today here talking about this last week's FOMC meeting results. So the FOMC meeting is where the Federal Reserve decides on the interest rate increases, decreases, or, remaining consistent. This last week, the meeting has resulted in the FOMC well, I guess this time the result was that the rates are staying consistent. No increase, no decrease. But also there was, a conversation had a press conference held where the chairman, Jerome Powell, said that he would retain federal interest rates at the level that they currently are for longer than previously anticipated. And that has to do with, inflation still being on the rise and the Federal Reserve trying to combat that inflation. So the market analysis had expected for the rates to remain constant. So this was expected. This wasn't some kind of a shock to the market. So this was relatively priced in, as people would say. But the part that is kind of the takeaway from this meeting was that the Federal Reserve has made it pretty clear the interest rates on a federal level will remain high longer than previously anticipated, which that is, generally speaking, bearish news. It means that the US dollars become more expensive or stay more expensive to borrow, and that makes business more expensive, which tends to, bring down equity prices. So that was the big news this past week. The FOMC meeting came in pretty much as expected, but the real takeaway was that the Fed was going to keep these rates higher for longer than they initially said they would.
So like you said, it was within consensus, but let's see how it affected the chart, the markets.
Yeah.
So here on the left side, here I can make it a little bigger. So this is the S&P 500. The ticker is SPY, or the SPY.
The SPY.
And what's interesting is that if I change this to the daily, time frame, we see a head and shoulders.
Yeah. So head and shoulder. That's this is a big technical analysis pattern. It's pretty clear here. So you've drawn it out kind of nicely there. But yeah, you can very clearly see the 1, 2, and 3 points that make up this pattern.
1, 2, and 3. The shoulders don't have to necessarily be on the same level. So like you can see the shoulders a little higher, but if you look at an indicator, like we had the bull signal right at the bottom, and then it ran up, and now we had a little bit of chop here. You see a bear bull, but then we have a bear signal when the head and shoulders pattern, like it's broke, where we have the breakout. So how do we sort of measure the target? What we do is like we measure the head to the neckline, and then we kind of like this. So the same length, you kind of draw it out here too, and that's your breakout target. And if this does play out, like, of course, the week is closed. Next week we might have a little bit of a retest that tends to happen. But you can see the SPY is on our trading buddy indicator strength band. That's our custom indicator that we've been using, and you can see how well. If we should switch it to the weekly, we could see how well it's been in calling like the tops and bottoms. So we saw a bear market there, then we flip back to bull. But if it loses the strength band, we might get a bear signal. So if we do get a bear signal, then the market is going to be in big trouble. It would seem like, if I take all my lines out, it would seem that this was just a lower high compared to the last high, and all this was just a retest. So
that is totally what it's looking like too, and that's coming straight back to retesting. So the last week candle, they're closing right at the strength band for the trading indicator. That is that is where you're expecting to see support, and so it is chilling out there. You can see that the SRSI, the stock RSI, there is a little bit on the over sold side, and so that's what Sid was saying, is that we might see it retest a little bit, meaning that at the start of the coming week, we could expect to see maybe a little bit of price action come back up, likely to retest this blue line that you've done, the neckline of the head and shoulder pattern. And so it's likely we'll see it come up to there so that the stochastic RSI can get a little bit out of that oversold range. And once it's out of there and it becomes effectively rejected at this neckline, then
either at the neckline or like around here, like that's also because
the previous previous support is now resistance.
Yeah, exactly.
And then we would expect to see a support flip into resistance. So the SR flip, which is usually what we're looking for to confirm the shifting of a trend.
And then it's like, and then it might continue down all the way to around like the 4 or 6 support region.
Yeah, which will be
there,
and that would be a good spot for profit taking from short sell positions if we're opening short, or it'll be a good target to maybe start buying back in. But clearly, the indication here is that we're moving down in the coming weeks, and that is absolutely going to be fueled a little bit by this FOMC news, where we now, as a collective market, have the sense that, hey, business is going to stay kind of expensive longer than we had anticipated, and so. You know, so that is going to be something that the market first needs to absorb here. And so there you have the very simple like
head and shoulders pattern. So if the SPY, which is basically the main index for pretty much all the top stocks, like
pretty much the stock market index.
Yeah, the NASDAQ is also going to sort of follow the same thing. And so I know someone, one of the viewers who follow us on YouTube was asking about Carvana, because we had an earlier video talk about Carvana, and we caught the nice run up actually.
Yeah, that was.
And now if we look at Carvana, it's not looking too hot. Like we did catch this whole run up looking at the bull signal. Like even if we look at the daily signal, I remember we caught this whole thing. And here, see, it started chopping around, but here it's sort of like double topped here.
Yeah.
And then it lost the band finally, and we got a bear signal now. And if we change this to the weekly, this is basically a deviation now. So we had shared when it went out that it would close higher, which it did. You can see, you know, not this week, but the week before that, it wicked all the way up to here, closing higher. But then last week, when the SPY actually turned south, Carvana also, like, you know, basically topped out, and this is a bearish candle. This is like, I mean, this would definitely, if you're buying puts, you're probably going to profit a lot. Like, this is a very bearish candle. And also, if you look at the weekly resistance here, it actually deviated back below. Yeah. So if price goes over and comes back down, that's a deviation downwards, and that's considered very bearish. And even the length of the candle is very big.
Yeah,
so
the
this
body
definitely
section, that is very bearish.
Exactly. So this like deviation would most definitely, it would make the price keep going down. So Carvana, I wouldn't hold it here.
Yeah, Carvana
personally. And we did sell. In fact, we sold exactly like when we saw it like tap this resistance and have this, and we saw a bear signal, we did sell around here. That's what we did when it got rejected at resistance. So
that was pretty solid
trading. Yeah. So like so we did play the run up, insane profits, but
yeah.
You know, now it's
again
out.
Similarly with the expectation for the SPY, we can expect maybe a little bit of the early week seeing some green in these charts, but I wouldn't be fooled by I wouldn't be fooled by it too quickly, at least not until we see it push beyond these previous highs, since it is starting to look quite bearish now, and the position to take might be short now moving forward.
Exactly. And similarly, I think like Bitcoin, and we look at Bitcoin just because the whole crypto market moves with Bitcoin.
Yeah, Bitcoin is kind of like
it's like the mothership.
It's like the SPY. Right? What the SPY is to the stock market, the Bitcoin is to the crypto market.
It's to the crypto market. That's a good way of putting it. That's exactly it. And and we can see like Bitcoin. If you've been following our videos, we've been sharing each and every move, and then we also had this. Let me see if I still have it. So we had, oh yeah, here it is. So we did have this rising wedge, which if you go back to our earlier videos, we called this when it, you know, we said it would lose it, and after losing it, it would start going down, which apps you can see with this candle, it lost it. Yeah. And then it's just been chopping, and it's been trying to hold above the our trading buddy strength band. You can see how it's like trying to act as support. And
it's still doing relatively well, honestly, as support, but it feels to me like it's a matter of time now. We're gonna retest, like you had actually drawn there in the orange.
Yeah,
retest that trend line one more time, and then eventually we're going to flip the support back to resistance, and we'll likely.
And I think it did actually with this wick.
Yeah,
like because the weekly candle just closed now. That's Gravestone Doji, I believe, and that's bearish. Like with this long wick at the top, and then just a body, small body down. That's
so you had actually we had actually shared the little orange like jag like that a little bit before, like a week ago, and so
yeah, if you look at
these recent candles. Oh yeah, there you go. Yeah, we had shared it. There it is. So we had shared that actually before it actually did this retest, and so it's nice to see now. If you go back to the chart and look at the daily. Yep. You can see that. Look at those last few days there. It looks like around Wednesday or so.
Exactly.
It literally to the peak of that orange line. So we did get the retest we were expecting, and it looks like we're going to be rejected right at that blue trend line and continue moving down. And
exactly.
That's again bearish. It looks like we're going to see the crypto market sell off right alongside the equity market and the stock market.
Yeah. And because like, you know, the stock is a little oversold, but you know what can happen is see it can curve up once and then like flip back and go back down, and I think that's what the retest we're talking about. It could do a small retest early next week, but then it's going to pretty much follow the S&P 500 and finally lose the. I think it's going to lose the strength band, and that's when, you know, we're going to start seeing some accelerated sell-offs.
And we do have those blue lines are kind of the targets that we're looking for that
for a long term,
for the kind of bottom of this bear kind of trend. So the first buy target there, at least personally for me, is right around $23,500 per unit. And depending on how fast we make it to that target, the second target becomes more viable. So if we get there, you know, next week already, then it's pretty likely we'll also see the 21,500 mark. If we just slowly grind down to that first target, it becomes less likely that we'll grind all the way to the second one. So basically next week, as the week is going to start here, we're going to be looking for potentially early, like Monday, maybe even Tuesday, kind of green market activity before we are, you know, confidently rejected and start pushing down much more aggressively. And seeing, you know, the trend kind of materialize here as a short trend, you know, kind of more on a long-term chart here. So, you know, maybe like Sid said, we'll see the strength band on the trading buddy flip to red. We'll very likely
on the weekly.
We'll.
If you look at Ethereum, like,
it's
you know,
flipped.
it's already like, you know, we had shared this. It had lost the rising wedge, and ever since then, it's been just. dropping and dropping. It's been rejecting on our strength band. See, after it turned red. So, you know, that's how our indicator works. Like if it's bearish, it keeps getting rejected on the strength band. If it's bullish, it keeps trying to bounce on it.
Yeah, exactly. And so I think we are seeing that kind of playing out here. And we'll have to keep an eye on it. But I think this week we're probably going to start getting a clearer direction in these markets. And we're both of the opinion that direction is going to be, you know, bear, down, sell off. And that is going to be, you know, fueled by the FOMC news and fueled by, of course, the general market trend. And of course, that head and shoulders pattern looks pretty clear on the weekly chart for the SPY. And so, you know,
Yep.
SPY is kind of like the North Star for a lot of these equity markets. So if the SPY is moving down, you can generally expect the rest of equities to move down as well.
Right.
Yeah.
And speaking of crypto, I think like we can end with this, right?
Yeah, the Stoner Cats did end up getting sued by the SEC. So we actually brought this up. It was maybe a month or two ago now, when the first
or I think lesser. I think it was a couple of weeks ago. If you look back at our YouTube videos, you can check out.
Okay, yeah, I do. Yeah. I forget exactly when we talked about this, but it was around the time that the Treasury was releasing its recommendations on how to monitor and how to like legislate the crypto markets. They basically were saying things, or the language of that was very heavily like, okay, a lot of these things are operating in a way that would categorize them as brokers or that would categorize them as security vendors. And so we actually brought up Stoner Cats as the example, is like, is Stoner Cats then selling unregistered securities? And the answer is yes. The answer is yes. Clearly,
we had absolutely called this. We had talked about this. We said they might be in trouble.
Yeah, I think we tagged them in the video, so maybe maybe they got a little heads up.
Hopefully they like took notice, you know, and
yeah.
And we were right. This is exactly what happened.
Yeah, and so I was reading into like the exact lawsuit here from the SEC to try to understand what it is that categorizes them as a security, and the big smoking gun in that case is more or less the fact that the Stoner Cats project has a secondary market revenue like royalty, and the amount of money from that royalty was used to buy back, or to distribute rather, to holders of the NFTs. And this buyback and distribution was advertised on the front end. So that when you advertise that kind of a buyback program, or this type of a distribution of project revenue, that is without a doubt a security. And that is where they got in trouble here. There is a lot of cryptocurrency projects, or specifically NFT projects out there that do this type of practice, where they share parts of their secondary market with their NFT holders. And that is very dangerous, especially in this precedent here being set that, you know, that very much makes your project a security. And it's kind of scary to think, because that is very much also the meta of NFT projects. A lot of NFT projects pitch a portion of the value proposition as owning a cut of the entire market of their project. So especially as someone who owns their own NFT project. So I have a project.
You should. You guys have Neon, right?
Yeah.
Neon
so
Space,
we have a project called Neon Space NFT, where I'm the artist behind that. So I worked in visual effects for many years as a senior artist for like the last 5 years there. Worked on a lot of big movies and stuff. Yeah. It was really fun. But I also really wanted to get into something where I own the intellectual property that I'm working on. So, you know, I found that NFTs and this crypto kind of economy gave me the ability to create a project that I own, and to be able to distribute it in a way where I own the back end of everything. And the big deal with the way we distribute our assets is that we make it very clear that what people are buying is artwork from the artists. There's no utility beyond that, beyond collecting, maybe trading with each other. You can sell them on the open market. Of course, that's the nature of the asset, but there isn't a reward share program for selling them. There isn't anything like that. So we make it very...
it's like loving the artwork.
Yeah. Like so we make it clear that like, hey, exactly. It's like, hey, if you want to buy our artwork and support the artist behind it, that's what this is. There are, of course, like we do have a few partnerships with gaming, like utility, for example, the Wombat app. If you're familiar, nice. There's a Wombat like dungeon crawler game, and you can use our NFT assets within that to get kind of gaming utility. But even that utility, we don't advertise as part of our drops of our anything. And it's more like, if you're part of the community and you know about this, then great. If not, it isn't the selling point. And the reason we don't advertise it is, one, because we're not trying to sell unregistered securities, and two, we don't control that utility. It's not our game. It's not our it's not our utility to give out, and it's up to the game designer to, you know, add or remove that utility, and they could remove it at any moment. And because of that, I don't ever want to mislead anybody into purchasing stuff from our project, you know, thinking that it has something to do with this game. And when people even come and ask me about, hey, is this something, you know, I should buy to get into Wombat gaming, for example, I will tell them, if you want stuff for Wombat, buy Wombat NFTs. You know, it's like this, if you want to support our art project and us as artists, that's why you're buying this stuff. And that is very against the grain as far as like what most project creators do in the space. But
that's the right thing. You guys are doing the right thing.
It's hard to kind of stick to that, because, you know, and the other side of it is we sell our NFTs for $1 a piece. So we're not doing like $1,000 drop, and we're not, you know, it's hard to argue that, you know, when people spend $1 to buy a piece of artwork from us, that's like the price of a sticker. It's not the price of an investment. So we're not needing to create a return on this investment, because people are participating for fun. And that really isn't the norm when it comes to NFTs. And even other projects that do, you know, are run by artists and that are created, you know, for the purpose of an artist trying to own their own IP, they are running into these issues where they are inadvertently creating securities, because they're following what the meta is of the space, which currently is to share that revenue with your holders. And it's just difficult because you're not allowed to do that, you know? And so again, it's definitely an interesting time to be in the NFT space, especially as a creator. You do need to be very careful about how you market your products. A big red flag here, and the reason why the SEC comes after these projects time and time again, seems to be the fact that they are marketing return on investment and some sort of market share that is much beyond the aspect of, hey, you can buy a cat and own it on the blockchain. You know, it's not, that's not how stoner cats were pitched, and that is the problem. So again, I own a stoner cat, you know, I like participating in the space, of course, and like I think it's really fun to. But
then again, you bought it because of like the whole creative aspect of it. You know what I mean?
So the Stoner Cat, the reason I bought mine is because the Stoner Cat is actually a TV show that's, you know, Mia Kunis voices one of them. It's produced by, you know, Hollywood producers like Ashton Kutcher and the likes. And the reason I bought my Stoner Cat is because I wanted to watch the show. And the way you watch the show is you have to sign into their website with a wallet that holds one of those NFTs, and that gives you access to watching those episodes. So that was my whole end game. The whole aspect of market share I didn't really care about, but it was there, and the fact that it was there is the problem. Like, you can't do that kind of stuff. You are then creating a security, and, you know, securities are great. You know, we trade securities all the time, but they need to be issued by, you know, licensed security brokers, and that isn't the case in this new kind of technology where literally anybody can create these assets and market them as whatever they want and raise millions of dollars. So it is a little concerning as a creator in the space to see what the current meta is and to see how many people are actually falling kind of into basically creating their own unregistered securities. But it's also nice to see the SEC kind of stepping up and putting a stop to some of that stuff, because it is too rampant in this space. So, you know, we are keeping our eyes on this. And we did want to mention that, you know, this was a big development that we actually kind of saw coming a little bit from a distance. So it's nice to kind of be verified as like, we kind of see what's going on, and that is, you know, the case.
We've called a bunch of stuff, actually. Bank collapses.
Oh yeah.
You know, rug pulls, and now this.
Oh, we were.
SEC going after.
I was looking through some of our posts, and I think we were like 3 days early on telling people to get off of FTX, like get your money out. Literally 3 days later, they stopped withdrawals, and the people who did actually heed the warnings got out in time, which is, you know, that's great. Even Celsius, I think we were like 4 or 5 days early on the Celsius collapse.
Yep.
So
the Gemini
Earn program,
the Earn program.
Yeah, that one.
You know,
that one. The fact that they went insolvent there, or at least their partner went insolvent, and, you know, those funds are still locked. So yeah, we definitely pay very close attention to the space. We try to give people as much heads up as we can, and we definitely post what we're doing with, you know, within the space in real time, so that people can.
Yeah, we have our exclusive Discord community. It's called the Maxiverse. If you go to our website, maxi.io, you know, our members, if you sign up, members get the trading indicator that you've seen, which works on anything, any chart, and also you get real-time news updates even before it's news. So, and we've been pretty good at calling events before it actually breaks out.
We share the rumors. Once the rumors are out there from credible sources, because we definitely you know, we've been in the space long enough.
There's a lot of junk out there, so we take our time to
we've been in this space to know who the credible sources are, and once we start seeing those rumors circulating in those circles, we're quick to let people know. It's definitely value to people who are in these spaces to be able to, you know, get that information without themselves having to monitor all these communication channels 24/7. That's kind of what we're doing for you. And if that's something that you'd like, we'd love to see you join. So just come on over to maxi.io, sign up as a member. The first month is free, so you really don't have anything to lose. And once you're a member, you can jump into our Discord. You can look through all the history of the stuff we've posted and get a sense of, you know, what it is that we do bring to the table. So we'd love to see you join, and hopefully stay safe out there when it comes to some of these assets. It is definitely still the Wild West, even though, you know, we're like 10 years into this crypto market kind of evolution now. It's still very much not well defined, not really, you know, a space where anybody can be savvy to it just from jumping into it. So it's definitely nice to be part of a community where you are getting a little bit of a guidance. And if there is individual like questions you have, then you also have an access to ask those questions directly. And we will be chatting in there. We will let you know exactly, you know, how we would approach whatever it is you're trying to approach, or maybe walk you through step by step how to do some things within this crypto market that you might not feel confident doing on your own. So it'd be lovely to have you. And as always, you know, keep your eyes on these markets. Things are absolutely moving south a little bit this coming week. But like we said, it's likely that the early few days of the coming week we'll see a little bit of green. And let's try not to get faked out into that and, like, you know, ape into call options or something early in the week just to get wiped out in the second half. So we kind of have our game plan here for the coming week. Let's see how it plays out. We'll check back in next week to see how the head and shoulder pattern has played out and how, you know, the crypto markets are developing forward. But until then, thank you guys so much for joining us. I'm Max, and as usual, that was Sid, and we'll see you next time.